Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 11th of October. All right, now let's just have a quick recap of where we closed Friday. Obviously, the non-farm payrolls came out. Very disappointing for the dollar bulls, including me. They were expecting 500K, right? The non-farm payrolls came out 194, the change, but we had a massive improvement in the rate, which the forecast was 5.1%. So you've got one number that's down, one that's up. You know, what it really does is neutralizes the actual event, right? It's like a just complete fizzer, and that's what we've seen across the board. But I got to say, like the detail here, right? I mean, the 4.8%, even the average earnings year on year was up as well. These are really strong numbers. Now, I know the change for the month didn't hit the expectations, but outside of that, you got to think if you're a hedge fund manager, you still got to be long dollars, right? And the US Treasury yields continue to climb. Equity's starting to dribble off. This is like sort of good market conditions where everything's doing everything it should. I think when we come into Monday now, it's a holiday in China and the US as well. So it's going to be a slow day Monday, right, across Asia and Europe because of that US holiday, right? The markets won't really open up in the US till Tuesday. So I think once they do, everyone reassesses the numbers and go, you know what, everything's still on track, right? And there's reduced COVID numbers, cases in the US. That's going to keep going, helping the dollar recovery there as well. You see US equity futures, just to kick things off for the week, going down. I guess it's putting a little bit of downward pressure here. If I draw a line through that, the dollar block going down, the dollar pairs going up. I think that's the way we're going to see things start to evolve this week. Now, if I just give you a look at the charts, and I'll come back and review the data this week. Now, this is the price action you get with that convoluted sort of outcome, right? We know if we get good non-farms, strong non-farms, and a good unemployment rate, the thing goes up, and vice versa, it goes down. If one number's up, one number's down, you don't get that sort of clean move. And if anything, you get a little bit of a question mark. Like you can see, even see the short-term, trading this thing short-term, non-farm payrolls is problematic because you can get big spikes in liquidity. But you know what, overall, the dollar is still going up. Now, it's not against dollar CAD. And that's primarily because when we, Friday, at the same time as the non-farm payrolls were coming out, we had the Canadian data, and it was pretty good, right? You've got the employment change, 157, right? I think they were looking for about 65K. 6.9%. Now, the good part about this is very similar to the Australian non-farm, employment numbers. Full-time employment change, they give you a breakdown of that. Now, this is a really big number, right? And it's structural, you know, the superannuation, health, everything backed into that. So that's the really, the numbers were good, but they're actually better because the full-time employment change was much stronger, right? So that gives it a more of a solid footing. And with that, we did see dollar CAD cruise to the downside, right? So you get the initial announcement, US numbers weren't good, you know, you're leading to dollar CAD. Now, it's one of those things, people might be thinking, oh, well, I could have traded dollar CAD or the US. Well, you know what? It's a tricky situation when you've got two major employment numbers coming out at the exact same time. Like this situation here makes it look easy, but it wasn't because liquidity at the time isn't there. But you know what? Afterwards, you can see exactly what's happening there on dollar CAD. Strong numbers, weak or sort of benign, sort of neutralized US numbers should see the dollar drift lower. Or you know, in actual fact, in this case, Canadian dollar stronger than the US. The US hasn't fallen; the Canadian dollar's rallied. Right? Just get that into your mindset now. So coming into this week, actually, let me just come back to the data while I'm here, because you want to sort of focus on where the opportunities are this week, right? And I've just got Forex Factory up here. As I said, there's a US holiday, Canadian holiday, sorry, not Chinese, today. So just be aware that North American session is going to be really not seem like it's open. I wouldn't think, unless we hear some outrageous event coming out. Now, we've got coming into Tuesday, we've got the UK employment numbers. Now, Forex Factory's got the yellow here. It's a red number. It's a big number. You've got to, I don't know why they've gone back, maybe because the UK data has been out of the loop for some time, that they are focusing on it. But Tuesday, sterling is going to be in play. as is the Euro with the ZEW economic sentiment numbers for Eurozone and Germany. Sort of a couple of big lead-ins. Also going through Tuesday, late in the day, you got the 10-year US bond auction. It's going to be interesting. Treasuries are at the forefront of everyone's thoughts at the moment. But where things really start, this is not too dissimilar to most weeks, right? On Tuesday, we've got the US CPI numbers, and we've also later in the day got the FOMC meeting minutes coming out, right? So a couple of things to ponder there. The US CPI numbers will be very interesting. And this forms the shape for the US dollar for this week, because we've got a number of different things coming out where we will get a very good look of what the US dollar is going to do for the rest of the month, right? So I'll just focus on that just for a second. As I said, you got the US CPI, the FOMC minutes, you get another 30-year bond auction there as well, okay, just to keep you on your toes. And we scroll down, you've got US PPI, right, another inflation number. You've also got US retail sales figures there on Friday as well, right? So decent numbers. These are all numbers that interconnect and tell us a lot about whether that US economy is growing or not. As I said, those US CPI numbers, this is always a great week when on Tuesdays we get the US, or Wednesdays, I should say, this time around, we get the US numbers coming out early in the week, gives us direction, and then, the other numbers can feed into it. Of course, Thursday, Aussie employment numbers. The RBA isn't really in the game. They've come out and said they're not going to be doing anything with interest rates for the next couple of years. So I don't know if that's really going to come into play there. But as I said, employment numbers, employment inflation on most of these countries is important. Now, and as you come through, I'd keep an eye on the crude inventories, see what's going on there. I mean, oil is above $80, right? If there's massive oil inventories, then that should take a bit of pressure off the oil price. If there's a shortage, well, I'll tell you what, it's going to keep going to the top side. And then, as I said, Friday, US retail sales. Have a look at these prelim University of Michigan consumer sentiment numbers there as well. We have got lidded in there a bunch of Fed officials speaking throughout the week. They could always add a little bit of flavor, but the US dollar is going to be the main driver. And that's a really good week. As I said, I know you get a long weekend. There's no, Monday's going to be very quiet with that Canadian and US holiday Monday. But coming into Tuesday, we've got good opportunities all week. It's all dollar directional, right? So when it comes back to that, you are going to be looking closely, seeing what happens with the Treasury yields, the US equities, and then obviously what happens with the dollar as well. We should have a good lead in here to where most of that activity is going to be. Now, just coming back to the major currency pairs, I still think this is a short-term blip on the radar. It's not like things in Europe, the UK, Australia, or New Zealand are peachy, right? They aren't like exactly, their economies, half of them are shut down, half are coming out. There's just lackluster performance. I could still see sterling. Like sterling must be my go-to at the moment. This thing just is so overvalued in my view. Where at euro, no one wants to buy euro, even with those sort of mixed US numbers. I think euro's heading down to 114 this week. Obviously depend on the US CPI numbers. Sterling, well, I just don't like it up here. I'm not exactly rushing to sell it at these levels either. And the Aussie seems to be caught up with sterling. It's like there's something a little bit mismatched there. Whereas the Kiwi, it's sort of like the euro. It's behaving a lot more, rationally, I should say. If anything, the weak US numbers didn't really take it higher. That's a bit of a bad signal for Kiwi and euro. I think that they are definitely looking to head lower. They just need an excuse to go down. And that's where those ZEW numbers or the US data comes into play. The market's looking for reasons to get into positions. And that's what we need at this point. So Aussie, Kiwi, a little bit out of whack. Dollar yen still hugging those 10-year treasury yields. You can see that yellow line on top there, just doing a great job. Dollar Swiss is really going to bed. It's not doing much at all. The dollar index overall up and dollar CAD down. Not much Canadian data. As I said, Canadian holiday Monday as well. You probably think we might get a bit of a retracement, but it's really going to come down to oil this week, what happens with dollar CAD. So lots of opportunities. You got to get yourself just mentally tuned up. As I said, with that Monday, right? just when the US has a holiday Monday, right, and combine that with Canada as well, the market doesn't open, right, for the week, right? A lot of the desks out in Asia used to have not skeleton staffs, but that's when they give the traders a break, an extra long weekend. So happens in the UK as well. So don't forget, Monday, don't expect a hell of a lot, right? As I said, unless we see a left field event. And then coming into Tuesday, we've got plenty to play for as the ZEW numbers and UK employment numbers. And then really Wednesday, US CPI numbers, FOMC minutes. Oh, we just want to get some variance in the numbers. I was going to say get strong numbers, but I'm sick of saying that because every time I say, look, we're all primed up for strong numbers, we don't get it. Let's just get some numbers on the deck here that rock the boat a bit, and then that'll give us opportunities. All right, guys, that's it from me. Have a good trade week. All the best. Cheerio.